All right, if you're watching markets right now, you probably felt it before you even saw the headline. Something snapped. Silver didn't just drift higher, it reacted. Fast, sharp, violent. And here's the part most people are missing. This wasn't random and it wasn't hype. This just happened. Donald Trump announced a sudden 25% tariff on South Korea. And within hours, you could see stress ripple through global markets. Stay with me, because I'm going to show you why silver is moving now, why this move is fundamentally different from past spikes, and how you can recognize this pattern before the crowd does next time. If you're watching this, you're ahead of most people who are still trying to figure out what just happened. Your job now is to understand the mechanism so you can see it forming next time. Before I explain what caused this exact move, let me teach you something most people never really learn about silver. People like to box it into one category. Either it's a shiny speculative trade, or it's an old-school safe haven like your grandfather talked about. But silver doesn't live in one lane. It never has. Silver is both money and machinery. It's used in electronics, autos, solar panels, medical equipment, and at the same time, it's what investors run toward when trust starts cracking. Think of silver like a bridge that connects industry and fear. When that bridge starts shaking, you feel it immediately in price. So, what does that tell us? It tells us silver reacts to two different kinds of pressure at once. Industrial demand can push it higher when production ramps up. Safe haven demand can push it higher when confidence breaks down. And when both happen together, that's when you see moves that catch everyone off guard. If this is making sense, drop a comment and let me know what you're watching in markets right now. Now, here's what's actually happening. When a 25% tariff hits a major trade partner like South Korea, it's not just a political move, it's a cost shock. Immediate, unavoidable. Autos get more expensive, electronics get more expensive, pharmaceutical inputs get more expensive. Companies don't absorb that quietly. They can't. They pass it on, they delay orders, or they freeze investment. So production slows, margins compress, and uncertainty spikes. And when uncertainty spikes, capital starts looking for assets that aren't dependent on smooth global cooperation. Let me break down the sequence for you. First, the tariff raises real-world production costs, not theoretical costs. Real costs that show up on balance sheets next quarter. Second, those higher costs signal stress in supply chains that were already stretched thin. We're not operating with the buffer we had 10 years ago. Third, and this is the key, investors realize this isn't a one-off. It's leverage-based trade policy replacing cooperation. That's the moment silver reacts. Not because traders are gambling, not because Reddit got excited, but because the system itself is becoming less reliable. Here's where it gets interesting. Silver is already embedded in the supply chains getting hit. South Korea produces semiconductors, electric vehicles, batteries, consumer electronics. All of those use silver. So you've got a dual pressure system forming. On one side, tariffs make production more expensive, which threatens to slow industrial silver demand. On the other side, tariffs signal geopolitical instability, which drives safe haven demand for silver. Normally, those forces cancel each other out. But right now, they're reinforcing each other. The industrial side isn't collapsing, it's just getting more uncertain. And uncertainty is what drives safe haven flows. But here's the part that should make you nervous. Silver doesn't need a recession to move like this. It only needs confidence to weaken. You don't need GDP to crash. You don't need unemployment to spike. You just need people to start doubting whether the system works the way it used to. And tariffs do that faster than almost anything else. Because tariffs are visible, they're measurable, they show up in prices people pay. When your phone costs more, when your car costs more, when medical devices cost more, that's not abstract, that's real. And markets react to real. Now let me show you what very few people are talking about. This tariff doesn't exist in isolation. It's part of a pattern. Over the last few years, we've seen trade relationships get more transactional, less cooperation, more leverage. And every time that happens, silver gets sensitive. Why? Because silver sits at the intersection of global trade and monetary credibility. If trade flows smoothly, silver behaves like an industrial metal. If trade breaks down, silver behaves like money. And when trade gets weaponized, silver starts behaving like both at once. That's what's happening now. This is the exact same playbook we've seen before. Go back to the late 1970s, trade friction, inflation pressure, monetary uncertainty. silver didn't creep up, it exploded. From under $5 in 1976 to nearly $50 by 1980. Why? Because the system felt unstable, inflation was running hot, trust in the dollar was shaky, and global cooperation was breaking down. Silver became the asset people ran toward. Look at 2010 to 2011. After years of financial stress and policy experimentation, central banks were printing money, governments were running massive deficits, and nobody knew what would work. Silver didn't rise because people were bored. It rose because the system felt unstable. It went from around $15 to nearly $50 in less than 2 years. Same pattern. And during the 2018 to 2019 trade war era, every escalation pushed industrial metals and safe havens higher together. Silver moved from $14 to over $19 while tariff headlines dominated the news cycle. Zoom out and you see the pattern. When trade shifts from collaboration to confrontation, silver stops behaving politely. It starts moving fast. And it doesn't ask permission. Now, before we go further, let me be skeptical for a moment, because I want you to hear independent thinking, not just hype. Could this be overblown? Could this be temporary noise? Sure, markets overshoot all the time. Maybe this tariff gets walked back in a week. Maybe South Korea negotiates a deal. Maybe silver pulls back and everyone forgets this happened. And yes, there are always claims of manipulation, or that silver never does what it's supposed to do, or that the big banks are suppressing price. Here's the thing. It doesn't actually matter whether there's manipulation or not. The mechanics are what matter. Focus on what you can control: policy signals, supply chain stress, monetary credibility. Those don't lie, even when price chops around. You don't need to predict the exact price. You need to recognize the environment. If the environment says uncertainty is rising and confidence is weakening, silver becomes relevant. It doesn't matter if it goes up in a straight line or if it takes 6 months. The setup is what you're watching for. There are probably 3 types of people watching this right now. Some of you already hold silver, and you're wondering if this is finally the move. You've been stacking for months or maybe years, and you've watched silver go nowhere while everyone talked about Bitcoin and tech stocks. Let me be honest with you, your job isn't to cheer price. Your job is to understand why it's moving so you don't panic on pullbacks. Because if you understand the mechanism, you know the difference between a healthy correction and a breakdown. If this tariff escalates and more countries get involved, your position gets more relevant. If it fades, you wait. But you don't sell based on emotion. You sell based on the environment changing. Some of you are skeptical and think this sounds dramatic. You've heard silver bugs talk about the big move for decades, and it never happens the way they say. That's healthy. Your edge is patience. Watch confirmation, not headlines. If you see sustained tariff pressure across multiple countries, if you see industrial demand hold steady while investment demand rises, if you see currency stress in emerging markets, that's confirmation. Until then, you're watching. And that's fine. Being early costs money. Being patient saves it. And some of you are new, feeling like you're late. You're not. This isn't about chasing candles. It's about learning how tariffs, trust, and metals interact. So next time you see this setup forming, you recognize it early. Maybe you missed this move. That's okay. The pattern will repeat. Your job is to study it now so you're positioned before the next one. So here's what I want you to answer in the comments. Which category are you in? Are you holding? Are you skeptical? Are you learning? Let me know, because I read every single one. Here's where I stand. I'm not screaming doom, and I'm not calling tops. I'm watching signals. Let me tell you what I'm personally watching. First, I'm watching whether more countries get pulled into tariff pressure. If Trump expands this to Japan, Germany, or China, that would indicate this is a broader policy shift, not a negotiating tactic. That matters because it changes the timeline. 1 tariff is noise. 5 tariffs is a pattern. Second, I'm watching industrial demand data versus investment demand. If both rise together, that matters. It means silver isn't choosing between being money and being machinery. It's becoming both. And historically, when that happens, moves get explosive. Third, I'm monitoring currency stress because silver moves fastest when money confidence weakens. If you start seeing volatility in the yen, the euro, or emerging market currencies, that's a signal. Capital starts looking for assets that aren't tied to any one government's credibility. Based on my analysis, this tariff shock wasn't emotional, it was mechanical. The fundamentals aren't breaking, they're validating. Silver is reacting to a real shift in how global trade operates. That shift might be temporary, or it might be the start of something bigger. I don't know which yet, but I know the conditions that matter are all moving in the same direction. If history rhymes and silver follows the 2010 to 2011 playbook, or even a fraction of the late 1970s trajectory, the move that follows could be measured in multiples, not percentages. But I'm not making predictions. I'm watching the setup. And the setup is live. Now, I'm not a financial advisor. This is not financial advice. Do your own research. Verify everything I've said. Check the data yourself. Look at the tariff announcement. Look at silver's historical response to trade shocks. Look at supply chain dependencies. Don't take my word for it. Take the data's word for it. That's how you build conviction. Not from someone on YouTube telling you what to do, but from understanding the mechanism yourself. If you made it this far, you're not just watching for entertainment. You're here to learn. That mentality will serve you well. Most people react to price. You're learning to react to conditions. That's the difference between chasing and positioning. If this helped clarify what's happening, share it with someone who's trying to make sense of markets right now. Subscribe if you want more breakdowns like this, and stay ahead of the noise by understanding the signal. If history rhymes, silver doesn't cool off because people feel better. It cools off when the system stabilizes. Right now, the system isn't stabilizing, it's fragmenting. Stay sharp out there. Think critically, verify the data, and make your own decisions.